Apple stock has been absolutely incredible over the last 2 decades, and it's a name that everyone knows. But here's the thing, between softening sales in China, rising tariffs, and some questionable product launches like the Vision Pro, well, you've got to wonder, is Apple still a buy, or is the party over? Apple just released their latest financials, and the numbers might surprise you, and it's what I'm going to cover today in the video. Hi, my name is Rick Orford, and I help investors like you make smarter, more informed decisions with your money. Now, I'm not a financial advisor, but I have been trading stocks and options since 1999, and that means I've been through market corrections, recessions, bear markets, and even the 2008 financial crisis. So I've seen the ups and downs and everything in between, and I'm here to break things down in a way that's clear, practical, and grounded in real experience. And you all know how much I love researching new stocks and finding the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times, and you can scan this QR code or visit fool.com/ricko to get your 10 stock picks right now. Apple is a stock that probably needs no introduction. From the iPod to the iPhone that was launched in 2007, Apple has been known for product innovation and design philosophy that consistently grab attention. People love Apple products because, as users say, it just works. And they do. That principle, seamless functionality, has remained a cornerstone of Apple's success. Flawless design, user-friendly interfaces, and a tightly integrated tech ecosystem across multiple product lines have helped Apple become more than just a brand. It's a lifestyle. This success has also shown up in its stock price. Accounting for its 5 stock splits, Apple stock was trading around $1 20 years ago, and today it's over $200, making it one of the rare companies to reach $1 trillion market cap. It's also part of the Magnificent Seven, the most prominent and influential stocks in the US exchanges. By the way, the data used in this video is powered by bar chart. It's one of my favorite tools. It lets you explore thousands of tickers and filter by price, volume, sector, and more. And it helps you find opportunities in seconds. I use it daily, and you can set up a free account by scanning the QR code here or click the link in the description. All right, so we know that Apple's a household name, but how do the numbers actually stack up today? So let's take a look under the hood. With a $3 trillion market cap, Apple holds the title of the most valuable company in the world, though it occasionally trades places with Microsoft. And I wouldn't blame you if you thought that Apple's best years are behind them. But here's the thing. Historically, Apple consistently beats earnings expectations. Recently, Apple reported its Q2 2025 results. Quarterly EPS came in at $1.65, beating estimates by nearly 2.5%. Revenue rose 5% year over year to $95.35 billion, with net income up 4.8%. Now, if you're wondering why these numbers might be a little lower than last quarter's, well, that's because Apple's sales are seasonal. Q1 is typically the strongest due to the holiday season, and that makes sense since Apple products make great gifts, myself included. Now, if we break it down further, revenue from products and services rose 2.7% and 11.6% respectively. For a company of Apple's size, that kind of growth is a big deal. Services growth also means stronger recurring revenue, which is a huge plus since it's less vulnerable to the hardware upgrade cycles. So, strong numbers, no doubt, but past performance doesn't guarantee future success, even in tech. So let's look at the risks that Apple is facing. So the biggest concerns that I have include a potential drop in global sales that's driven by tariffs, recession fears, and of course, geopolitical tensions. Despite a solid quarter, Apple is losing ground in China, the world's largest smartphone market. They're losing it to competitors like Xiaomi and Vivo. And the competition isn't slowing down. We can't also talk about risks without mentioning one of Apple's most debated products, the Vision Pro. Apple's premium VR headset reportedly cost $20 billion to develop, but has been poorly received. Developer interest has also dropped sharply, with many abandoning the platform just a year after its launch. Meanwhile, Meta dominates the space with cheaper, feature-rich headsets that support hundreds of games, making it a more accessible option. Apple has some serious ground to make up. As if weak VR sales weren't enough, Apple also faces the threat of escalating trade tensions and tariffs. Many Apple products are made in China. Even CEO Tim Cook has said that predicting the impact of tariffs is going to be difficult, especially beyond the summer. So that begs the question, will Apple absorb higher costs or pass them down to consumers? Well, smartphones are currently exempt from tariffs, but that could change quickly, especially with ongoing US-China tensions. Apple also announced plans to invest $500 billion in the United States over the next 4 years, likely to please US President Donald Trump. This includes expanding domestic manufacturing, which could reduce reliance on China. But US labor is far more expensive, and many components will still be sourced globally. Chip production, for instance, happens mostly in Taiwan. Relocating those facilities stateside is no small feat, nor can it happen anytime soon. So with an ongoing trade war, any escalation could disrupt Apple's supply chain. Now, even if Apple can get through all of that, we also have a question about valuation, because it remains a big question mark. Apple trades at 30 times trailing earnings, which is very rich. Sure, most in the Magnificent Seven are trading around that level. Well, except maybe Tesla, which I still think is really overvalued, but that's a topic for another video. Alphabet, Google's parent company, for example, recently posted arguably better earnings than Apple, with revenue and profits up 12 and 49% respectively. Yet, Alphabet trades at under 20 times earnings. So does that mean Apple is overpriced? While the brand, loyalty, and cash flow justify a premium to some extent, I'd suggest caution about paying top dollar for growth that's already baked in. Unless Apple releases another game-changing product or expands its services significantly, its current valuation could be hard to sustain long-term. I mean, I've owned the stock for more than a decade, but that doesn't mean that at today's prices, I'll be buying more. So that's the bear case. Now, let's look at what Apple has going for it, because there's actually quite a bit. First off, the brand is unmatched. Apple products command premium prices, and consumers are happy to pay for them. I myself, I've owned Macs since 2007, and I still do. And that experience isn't unique. Many who try Apple never go back. I mean, how many tech companies have consumers lining up for every product launch? That kind of loyalty is very rare, and it's one of Apple's strongest moats. iOS is projected to reach 1.3 billion users this year, and that's up 300 million in the past decade. Add to that the average user replacing their $800 or $900 iPhone every 2 to 3 years, and you start to understand the power of that ecosystem. And then we have Apple Intelligence. Sure, Apple was a bit late to the AI game, but that's nothing new. Apple prefers to test and ensure that the product works before launching. Now that they're all in on AI, I think the potential is huge. Apple Intelligence brings new experiences to users and opens the door for recurring revenue through subscriptions and third-party integrations. The key will be whether revenues exceed the development costs, but that's a longer-term story. So is Apple a buy? Well, yes, there are headwinds, but zooming out, Apple's long-term prospects remain incredibly strong. Analysts rate Apple an average score of 4.03. Basically, it's a moderate buy. The one-year high target sits at $300, which suggests some decent upside from today's trading prices. Analyst sentiment has also improved in recent months, and personally, I'd rate Apple stock a soft buy. Not technically a rating, but it's to say that I'm cautiously optimistic. So that's my take. But what about you? What do you think about Apple? Is it a buy? Let me know in the comments below and tell me what stock that you'd like me to cover next. If you found this video helpful, don't forget to like and subscribe. Thank you so much for watching, and I'll see you in the next video.